All right, guys. Good evening. Good evening. Hope everyone's well. All right, it's Thursday evening. I'm trying to figure out a schedule for this because I do want to do something that's on a consistent basis on a particular day of the week for these live sessions. So this is very much trial and error at the moment. It's all going to be based on the amount of people that are available at what times during the day. So whilst this is still going to be a testing phase, guys, you're going to have to bear with me because we will get the time and the day nailed down properly. But welcome to everybody who is on here. Good to see you. Yeah, I just thought I'd give a quick live stream, particularly with everything that's going on in the markets this week. Quite volatile to say the least. Some of the numbers that have been coming out have spooked the market. So I just wanted to have a conversation around that and also see who has questions and if there are any, points that I can essentially help with. What I will do is in the comment section, I will post this link in. So if you do want to join live, then feel free to hit that link. We can have a little conversation here. But I know that there's 39 of you on already. So yeah, let's have a look at what's going on. Look, I don't know if you are investing, if you're just starting out. I know there's a few people in the comments already saying they're a little bit worried, they're panicking a little bit, down 11% in 2 weeks. Yeah, this can happen with the markets, unfortunately. This is why, we always talk about managing your downside risk as much as possible. I'm seeing Tesla here as well. Tesla is now below 600 again for maybe like the second week or so. Um, and you know what? With Tesla specifically, we'll get into whether you should actually go and buy a load of stocks immediately right now. With Tesla specifically, I'm looking at the previous low, which I think was like 573, 571, something like that. That might be a really good entry for me to buy a little bit more of the stock because I think some of the news that is coming out currently is the fact that everything that's happening so far is simply short term. The markets are, I know there's a couple of you, Andy and Mel, you're in there. Bear me 1 second. I know that a lot of what's happened with the market so far, we've spoken about the fears around inflation. We've spoken about that, and we know that that was going to be a thing. We knew that if numbers like the inflation numbers that came out uh, over the past couple of days, and the numbers that will still continue to come out around some of the employment numbers, if they are out of kilter. So, for example, inflation numbers in the states came out at 4.2%. That's way over what they expected, and what they were expected would have, you could argue, would have been priced into the markets. So this has set the markets off a little bit on a tangent. We've also seen the likes of Yellen at the Fed also backtrack on their stance that they are going to have to move on in interest rates in order to combat inflation. So there's a lot going on. But one thing is for sure is that these impacts will only be short term. They're not going to be massive long term indicators into the value or the share prices of any of these companies that you've probably picked to invest in. It's short term reactions to news that, to be honest, maybe people were being a little bit too optimistic about. I mean, let's just have a look at where we've been over the last 12 months, right? We've been in a global economy where everything has been shut down. A lot of the economies have been propped up because money has been printed, money has been borrowed in some cases. This isn't, these aren't economies that have been working from a natural state of normal business. So I think that's really, really important for us to kind of understand that all of these things are transitory in nature. They are very, very short term. These are mid to short term kind of like reactions to news that I think people were going to be very, very optimistic about, that has turned out a little bit less. There are a few indicators in the markets around buy signals and stuff like that. If you start looking at the VIX, the volatility index, for example, when you see that spike, you're going to see the market sell off. There is a bit of a contention around some of the sentiment with the markets at the moment. And look, short term, we may see a sell off, we may not. I'm putting myself on the side of there will be further bad news. I'm expecting things to be a little bit worse than they currently are in the very, very near short term. So maybe for the next 2 to 3 months, moving sideways, possibly moving down, and then we slowly see a creep up. But the thing that you have to bear in mind when you're invested is this is a very much a long-term game. Yes, you may be in a position where over the last 12 months, you've seen those green candles and those green returns over a 3-month, 4-month, 5-month period. Unfortunately, there are periods when actually markets go down, and they go down over a 2-3 month period, and they stay flat, and then they increase in value. So those are just some key things to basically make sure that you remember, guys, that this is a marathon, is not a sprint. And hopefully, if you have started investing, you started this in the last 12 months, you haven't kind of gone at this under the assumption that it's just going to be money falling from the heavens, because that isn't always the case. It's very much a long-term game. So let's get some people in. There's 3 people waiting. Let's get Mel in first and foremost. 1 second. Let's get Mel. Mel, are you still there, my friend? Let's have a look and see. Mel's dropped out. Let's get Andy. Andy, how you doing, my friend?
Hello.
Hey, how you doing? I can hear you. I can hear you clearly. How you doing?
Yeah, good. Thank you. I'm so happy to finally be able to join you.
No, mate.
I just got back from work, actually. I left a comment on your YouTube channel that day. If you
Yeah.
Yeah. I'm new in the investing world as well, so I'm happy to be able to learn a lot from you. I'm currently listening to your podcast in what do you call that? Spotify.
On Spotify, yeah.
Yeah, from the very first podcast to.
Are you going back to your catalog? You're going through the entire thing.
Yeah. I'm going from episode 1 up to. I think I'm now in 20 something. I can't remember, but yeah, I'm happy to be here.
That's some real effort, mate. Because if I remember, there's probably about 70 odd or 75 episodes at the minute. So,
because I just started working not long ago, so I thought it would be great to learn about some investing as well. So yeah,
good.
So yeah, great to be here.
So how are you finding investing at the minute, mate?
When I think I started about 3 weeks ago. Everything was fine until 2 days ago, when the market was all red. I mainly invested in funds, index fund. I got a Vanguard ISA account.
Okay,
and then I got eToro platform.
Okay.
And then I think I'm not gonna just simply buy any more individual stocks at the moment. I will just see how it goes and learn more before I can do anything else.
Yeah, sure. I mean, what Vanguard fund did you go for?
I go for the FTSE 100, the emerging stock market.
Okay.
And then one more is the equity fund. I can't remember the full name of it.
Okay, so you got some UK, which is the FTSE 100, then you got emergency, which will be China in that kind of world. So okay, you've got it across. And so is the third one a global fund? Do you know?
I'm just logging in now. Let me just check. Oh, the third one is the US equity index fund.
Okay, cool. Okay, so you've got US, you've got UK, then you've got some emerging markets as well. So at least you're getting some geographical diversification as well. And look, to be honest, Vanguard are actually really, really good at what they do in terms of selecting where they invest globally and stuff. They have a huge team there. So, and it takes a lot of the pressure off you having to worry about researching the stocks and making sure that you get the diversification and so on and so forth yourself.
Yeah, I'm just a bit confused with the ISA allowance, actually.
Okay.
So say, for example, if I got to because I know the allowance is about 20K a year. So what happened if, for example, if I got 10K till next April, and then when it resets again, what happens to that 10K? Sorry, I don't know how to ask this, but
I know.
Do I get another 20K, or do I just have another 10K left for the new tax year?
No, okay. So you've got to think about this in dates, right? So the tax year runs from April the 6th each year to April the 5th. So within that 12-month period, you get a £20,000 allowance.
Okay.
You can put into it up to £20,000. Now, in your example, if you put in 10,000 and you don't use 10,000, when next year rolls around for the new tax year on April the 6th, you will get a new £20,000 allowance, but you will lose the 10k that you didn't use.
So what happened to the other 10k which are already in the account? As in, you know what I mean?
Yes, so the money that you invest, the 10k that
Yeah.
you've already got in your investment account, that will remain invested and that will remain tax-free inside your ISA account.
Right. So what you are saying is that 10k will still be there, but on top of that, I get another 20k?
That's right.
Oh, right. Okay. Thank you. It's clear
Which is
now.
why it's really, really good, and which is why, when we talk about investing, making sure that you use your tax-free allowance all the time, because essentially you're able to build. If you use £20,000 every single year for 10 years, that's £200,000 potentially that you have
Right.
completely tax-free. Also getting investment returns from the market, hopefully.
Oh, I see. Okay. Because what I'm doing now is direct debit into the account every month.
Mm-hmm.
So yeah, I don't really lock in every day to look at it, but I make sure money goes in every month.
Yeah. And that's the
Yeah.
best thing you can do, because with that, you're going to be getting pound cost averaging. So where the markets are trading off right now, you'll be buying these funds or the companies that this fund is invested in at lower prices. So
Right.
if the markets start to trail up, that's when you start to make money, but you're getting them at discount all the way through every single month as you're investing on a monthly basis. So it's a good thing. Pound cost averaging is very, very powerful.
Yeah, I read a few about that as well. Yeah. And also recently started to read some books about investment.
Mm-hmm.
So yeah, there are so many books out there. So I don't know where to start from. So I sometimes just look at other people's recommendation.
Yeah, so on in the description of the video, there is a link to some of the books that I recommend to start off with. There's
Okay.
some really, really good ones on there, so check those out as well, because they'll give you a good foundation.
Oh yeah, I think there are some recommendation in your website on your website as well, isn't it?
Not on the website, but definitely on Instagram and in the description here, but not on the
Oh,
website specifically.
right. Where is the description actually?
So let me actually, if I can find it, bear me 1 second. I'll post it
Yeah,
in here for you. 1 sec.
thank you.
Let me just find it here. Where are we? Where are we? Where are we? Bear with me just 1 second. Let me just find it. There we go. Right. So for anybody who's watching this, if you're also interested in books or any books that will be good as a read, uh, actually, hang on a
Oh
second.
yeah, I got it now. Thank you.
I have literally just posted the whole thing in there. Bear me 1 second, guys. I don't know if I can edit that. It is going to be, where is it? Where is it? Where is it? It's the last link in that. It's the last link right there. It says books. So that will take you through to a number of books that I think are really, really good for you to get started with.
Right. Okay. Thank you very
All right.
much.
No worries, Andy. And look, thanks for watching the channel and everything like that. And going through the podcast from the beginning right to where we up to date
Yeah.
to the
Do you
episode
mind
on
if I just
Monday.
ask one last question?
Yeah, go on.
Yeah. Because I am currently now in the UK, but I'm actually not from the UK. I'm from
hmm
Malaysia.
hmm
So if I eventually want to go home, do you think it's still a good idea to do some investment now in the UK?
Well, whilst you're here, you might as well use the tax. So, for example, your ISAs, whilst you're here, you
Yeah.
might as well use the allowances that you have because you're entitled to them. So, if you decide that you want to go back, then it will just be a case of closing your account. But you'll know that whatever you've managed to invest and build whilst you're here, at least from a UK point of view, you wouldn't have paid tax on that. So, it's a good thing to use.
Right. Does it mean that I have to close the ISA account if I decided to leave the UK? Or can I just leave it there? Or
Well,
is there any other way to still invest in the UK market?
right. Okay. So, right, a couple of things then here. So if you decided to leave, you would need to tell Vanguard, for example, that you're leaving the country. Um,
Okay.
Different companies will have different policies, but generally speaking, they will say, "Okay, that's fine. Thank you for letting us know." And some of them will offer you the ability to actually leave the account open, but then you would then obviously have to conduct the business from obviously over in Malaysia. So that's
Right.
one thing to bear in mind. But if you close the account, for example, and move back home, you would still be able to invest in the UK, but you would have to find an investment provider back over in Malaysia that will give you access to the UK market, if that makes sense.
All right. Okay. Thanks
Yeah.
very much, Pete.
No worries, man. And good to have you. Thank you.
Thank you.
Cheers, bud. All right, I've got. Let's have a look and see. We've got Manolis. I know he's just got off for a second, so I'll wait till he comes back and his camera comes back on before we bring him back in. Let me just have a look and see if there's any other any questions that we can come to very briefly in the comment section. Bear me 1 second, guys. So, so this is the kind of thing that I like when you look at the markets, because you have to decide how you're going to have a look at this in terms of your views, right? Do you see this as a positive thing or a bad thing? Now, obviously, the market's going down isn't necessarily a good thing. It's not fun when you're looking at your portfolio and everything's down. Clearly, like, it hurts. It hurts me when I see the money going down. And the funny thing is, the more you have invested, so the larger your account, the larger a 1% or 2% fall basically looks like. And when you accumulate that over your account, you can start to look at very, very serious numbers that make you want to quit. But with that being said, when the markets are down, it's a great opportunity to go and buy companies that you feel interested in or you have a particular passion towards. So, for example, with Tesla, this is the kind of thing that experienced investors will be looking at. Actually, it's looking very, very attractive for a company that might have been overvalued or deemed to be overvalued. You're looking for these kind of pullbacks to say, okay, I'm going to get back in and maybe pick up a few more shares at a better price. The key is, do you go all in or do you taper it in? And that is really down to your own personal preference and what you feel is right for you based on whatever research it is that you essentially do. But these are the kind of things that, are important, and it comes a little bit with experience, but it is possible. So let's bring in. How you doing, dude?
I'm doing very well. How are you?
I'm all right, man. I'm good. How's your week going?
Good. I was actually looking which stocks that I had in my shortlist fell the most so I can buy.
What have you got in your list then? What's on your list?
I had on my list Renishaw, which is a UK company that makes 3D printers, but I'm gonna hold off a bit because they're up for sale, but they still haven't found a buyer. So yeah, until they do, I'm not gonna buy. So I expect them to fall a bit more. But hey, that's me, and I'm a noob in investing, so don't listen to me.
Yeah, because you sent a couple of you commented, sent me a DM, didn't you, with something to want to add on. I need to have a look at them, to be honest. I'm in a position at the moment where I'm looking at things very, very closely. I'm looking at putting a load of money in, but I need to do a little bit more research on some of the companies that I'm thinking of individually. So for me, because I'm thinking of putting maybe 20 or something like that into the markets right now, I'm the kind of person that I won't go and put 20K just all into individual stocks. I'm going to split it and get a little bit of diversification. So I'm looking at maybe some funds and then maybe taking interest in a handful of individual companies and putting money into those specifically. That's just the way I like to invest because it's a core satellite approach. It's what I feel comfortable doing. And I don't mind actually just outsourcing some of it to, the likes of Vanguard or a fund provider to give me that stability.
Yeah, good. Well, the good thing with the company I sent you is that it's French, so you get the diversification in terms of geography as well.
Yeah,
so
absolutely.
There's that. Now, the question I wanted to ask is, with markets going down now, do you think that companies that are upcoming and they are just now starting to make waves, let's say, like Palantir, for example, do you think that they are going to take a greater hit and become a bit more attractive for buyers like me?
Potentially. I mean, Palantir's an interesting one. I haven't actually followed the stock too closely, but I think anytime you have a look at it, I think ultimately it comes down to some of the basics, right? Why are you buying the company? What do they do? What are their prospects? Because I think for most companies, if you're interested in buying them and they've got like a product, unless there's something that significantly changes in the direction of the business, what they were aiming to do in the first place and the market that they're catering to, unless something terrible happens, should still be there. So whenever you're buying a company, it's about prospects, right? Are they changing something? What is the likelihood of them being able to make headway and break ground in that arena using their competitive advantage and all this kind of stuff, like product, USP, management teams, all that kind of stuff. So I think with companies like that, yeah, they might take a little bit of a hit and find it really, really difficult right now. I mean, look, just look at the tech sector. I mean, I looked at it, I think it was yesterday, before yesterday, everything was down. I think there was one company that was up. It's just bloodbath. And like most companies, it will be an opportunity for you to be able to get into that company at a lower price point if you really believe that actually what they're bringing to the table is going to change things moving forward, and they do have proper growth potential moving forward.
Okay.
I mean, what are your views, having looked at them?
Look, I've looked at them. I've looked at their latest report, which was quite good, apart from the fact that most of their customers are US based, so they don't have an exposure, geographic exposure in terms of customers. However, the customers they have are companies that everybody knows. So it's not like people that won't pay them. They are good companies. Also, one of their products, because they only have like 2 or 3 products that they're giving away at the moment. One of their products has a lot to do with the industry that I am in at the moment. And I would kill to have that at work tomorrow. It's that good. And I'm not joking. So that's why I'm looking into it. And I mean, the stock price is not terribly high. It's like $19, $20 at the moment. But if it drops to 15, for example, yeah, hello.
Then you'll be questioning why not to buy it. Absolutely.
Yeah.
And I think this is really, really important for most people if you're looking to invest, that, you know, if you're able to, because many people will be like, oh, start with something exotic. But if you are able to start with something that you either have knowledge in, at least you have a basic foundation of how the industry works, and how, if a company like Palantir is providing something to your industry that you think is going to be game changing, you can see the market for it. That gives you confidence, and that's always a good place to start if you're just starting out, because it means that you can kind of eliminate, and not completely eliminate, but mitigate, I should say, some of the risk that you're taking.
Yeah.
And I think more than anything, when you're investing, it is confidence in your decision. And a lot of that comes from, number one, know-how, and a little bit of confidence in, okay, I understand what they're doing. I know that they have a market that they're going towards, and actually they will have a really big impact on said market, regardless of whether the market is, you know, $100 billion or $1 trillion, or, you know, a $50 billion market. As long as they've got some inroads into that market, that's the most important thing.
Yeah. Okay. Good.
Cool.
And my second question was, do you think that with the stock market going down, we're going to see the same thing with the crypto market? Because honestly, the amount of shit coins that have been launched over the last few days is staggering, and with no fundamentals whatsoever. It's just, oh yeah, we launched this coin in order to make it 100x, 200x, and scam people and get away with the money. Basically.
I mean, I know some TikTokers who have launched their own coins over the last week or so, and that's just gone absolutely nuts. And I have to question. This is where you look at regulation, and when you think regulation would be handy in those kind of situations, because, you know, I don't think, in answering your question, if I zoom out and go, okay, so out of all of the altcoins and all the rubbish coins that are around at the minute, these meme coins that are being developed, will they be around in 3, 4, 5 years' time? God knows, probably not. Majority of them probably won't. But I think the big boys, Bitcoin, Ethereum, Cardano, and some of the other big players, Stellar, Lumen, XRP, they'll probably be around. And I think, if anything, those are probably the more solid ones. It's just, I mean, fundamentals don't really work when it comes to cryptos. You're not looking at the business, the turnover, all that kind of stuff. You're looking at the application use cases, right? I think that's still important, to make sure you're doing your research on cryptos on that front. But I think over the last couple of days, I think Bitcoin went down yesterday because of Elon. Doge went down yesterday because of Elon. I think Ethereum still teetering around about the 4,000 mark at this point in time. And I'm interested to see, actually, on a personal note, whether, because of all the hype around crypto at this point in time, whether we see market volatility. And yes, some of that is institutional, but there is also retail play within that as well. People fleeing from a retail point of view. I wonder, and it'll be interesting to see if we see a portion of that money coming out of the markets go into crypto over the next 2-3 days or a week. I don't know the answer to that. I'm not sure that we would absolutely evidence that, but with all the hype that's going around crypto at the moment, that just seems to be the area that has momentum.
Okay, cool.
But I could be wrong, especially when it comes to crypto, because it's really not.
Yeah,
it's not my
nobody
forte.
knows.
Yeah, but I mean, I am looking to do a live. We've got it tentatively for June the 12th, which is a Saturday. It will be like a 4 or 5 hour live session. We're going to be talking property, forex, crypto, investing, and just general money. And I'm waiting for my crypto guy in the States to actually come back and confirm. So that will be an interesting afternoon of just conversation across a number of financial topics for people to dial into. So yeah, that'll be. But I can't talk about it until I get all of the confirmations through just yet.
Okay, great.
Cool, man. Good to speak to you.
Yep.
Cheers, man.
Cheers.
Right, guys. So if you do want to come on, then do feel free. I will post the link. Let me just grab that link one more time. I should have pinned it beforehand. If you just want to have a conversation, you want to ask a question to me directly, feel free to come on. There is the link right there. Let me just find some other comments or thoughts that are in the comment section right now. Let's have a look. Let's have a look at this. I've just seen a comment on here about the quality. Let me know if it's bad. If it, just do let me know. I have got it the highest it can stream, so it should be okay. My connection is excellent, so let me know if it is on my side that you're having issues. So Sophie's saying up here that she started in January. Let's close this down. I started in January of this year, but I'm investing for the long term, so I'm not going to panic. That is always good. Long term, it's a marathon. It is not a sprint. Really important to remember that. Let's see what else we have here. So this is a common one. I thought I was buying a dip, but then there was another dip and another and another. That often happens with the stock market. So sometimes it is really, really difficult to be absolutely 100% sure that you're entering the market at the right time. And unfortunately, it's impossible to know because we can't time the market. We don't know what the lowest point is going to be unless, somebody's Marty McFly and can bring back the sports almanac from the future. You really don't have any way of knowing for sure. So I think one thing that is really, really important is, you've got to base your decisions on research. And I mean, really, really trying to get your information from a variety of sources and really understanding the businesses that you're looking to buy, being able to contextualize it against the wider economy and everything that's going on around there, and then taking a leap of confidence or a decision based on confidence, because you may be wrong. There may be another dip, and there's no real way of mitigating that. You just can't time the market. And unfortunately, that's the nature of investing. But the idea is, and I said this a little bit earlier on, that if you are going to go and buy some of these companies on the dip, then you have to make sure that you're buying it at levels that, number one, you feel comfortable with, and number two, that you feel is right for you. Because, it might fall again, and there might be another dip after that. What are you going to do? You're going to sell your position. So the decision that you make is really, really, really important, and you need to make sure that you're making it with confidence, based on research, also based on conviction, and all that good stuff. Arjun, I know that you came in. I don't know, you just dropped off again. So if you do want to join, guys, the link is right there. I'm just having a look through a couple of other comments. Okay, here we go. This is one from Simon. What percentage of my portfolio should be in well-diversified ETFs? Many thanks. That really depends on what your risk profile is. And look, risk profiles and how portfolios are built will vary from person to person. So, I mean, if you were a coaching client of mine, I will take you through a risk questionnaire, so you'll understand whether you're a cautious, balanced, or an adventurous investor. And then what we would then do is we would then have a look at right, who are you using? How are you investing? And how might the traditional look of a portfolio based on your risk profile actually look like? Then talk about your time horizon, how long you're going to be investing for, and then how you might feel about extending beyond the norm. So for example, if you're a balanced investor, for example, then you'll probably have anywhere between industry wise between 40 to 60% in equities, then the rest will be kind of in bonds. Now, if you're looking at a 100% equity portfolio, there are different ways you can diversify. So you can diversify across regions, across sectors, across number of companies. So whether you hold 15, 25, 30, 40, 50, that's also a factor in diversification. But also you can diversify across asset classes. So without really understanding what your portfolio actually makeup actually looks like, it's hard to say, well, in order for you to be diversified, well diversified, you need to be here, because I don't know what your risk profile is and a number of other factors. But generally speaking, if you're looking at purely a portfolio from an asset, a diversification factor where you're looking at a number of maybe asset classes, bonds, maybe a little of commodities, gold, those kind of things, and you're using a collection of ETFs, individual stocks, so on and so forth, remember you need to be mindful of your equity exposure versus safer assets like your bonds and your gold and so on and so forth. If you're buying an ETF, then you probably will have, so for example, with Vanguard, even though you might have it be 100% in equities, you will have it invested across different regions and across different sectors. So you automatically get a little bit of diversification in there. But those are the choices that you need to make sure you're picking the right one to match how you want to invest. I know that's a long-winded answer, but I think context is really, really important when we have these conversations. So, Toto's saying he's opened a stocks and shares ISA last week. Well done. Let's have a look at this. FTSE 100 is one of the worst performing funds. FTSE 100 at the moment, I mean, the FTSE 100 is the top 100 companies in the UK. So actually in the video tomorrow, because I did a video, Stocks for Beginners, and we had a look at 5 great stocks, people asked to do a UK version of that. So in the video tomorrow, what I do is I talk about the UK market specifically, the different markets we have in the UK. So we've got the FTSE 100, the FTSE 250. We've also got the AIM markets. I explain the difference between each of them, so that you kind of know, like, if you're looking to build a portfolio and you want some stability, where do you go? Do you go to 100 or do you go to 250? And then I give an example of 3 stocks that you can use to basically act as like a foundation to your portfolio. That isn't meaning you should go and buy those companies specifically, but I've given you 3 examples. You could pick pretty much any of the top 25 companies in the FTSE 100 or any mixture of the top 100 in the FTSE 100 to form a base foundation. You have to do your own research, but I gave you an example of 3. That's going to be in the video tomorrow. So for people who are looking at the UK market at this point in time thinking, oh my God, where should I go? What kind of stock should I be buying? That video will really, really help you. It's also very important to understand the difference between, you have to make the distinction between recovery stocks, growth stocks, and blue chip and foundational stocks. Very, very important. Airline, AIG, that's recovery stock. As once we get back out fully to, traveling, hopefully soon, fingers crossed, then those kind of companies will do really, really well. So many people may have a look at it and say, well, actually, there's a huge opportunity here for me to have AIG, because as travel starts to open up, hopefully confidence means that the share price will increase in value. But what happens if you don't? It doesn't mean you should go and put all of your eggs in that one basket. You take a calculated risk with a portion of your holding going into X company. But again, you have to do your research. You have to make sure that you're comfortable with those kind of purchases. All right, guys. So we are at this point in time, where are we on the likes? There's 132 of you. We've got 44 likes. Let's get those likes up to 60 if we can. I've just literally glanced at my phone. Oh my God, halftime 2-1 to Liverpool. That's not good. I looked at it earlier and it was like 1-0 to Liverpool. So I don't know what team he's actually fielded, but we need a big second half. So let's get the likes up, guys. Thank you very much. 57. Let's see what else we have here. This is a good question. I'll give you my thoughts. I mean, global small cap index fund. Um, well, I think if you're looking, so let's break this down. Okay, so a global approach is good. Yeah, so exposure to the UK, US, Europe, emerging markets, Asia Pacific. That's a good thing. Small cap. Small cap will be smaller companies essentially, so they won't be as financially secure as some of the big boys, the blue chips, right, the large cap companies. With small cap though, you do have the added benefit that they can be really, really nimble, and if the small cap companies see growth or an opportunity, they take advantage of it. You can see that they will grow quite quickly within a very short period of time. They may pick up, small things that the big boys have looked at the business and be like, listen, that's too much for us to do. It's too much effort. It's costing us too much, and decide to cut their losses and just leave it alone, right? Small cap, mid caps might pick up that kind of business, and it will make a huge difference to them. So if you've got a global small cap index fund, I think the important thing to kind of bear in mind with that is make sure you understand what that fund is tasked to do. So what is it tasked to do? Where's it going to be invested? What is it invested in? Has it got a target? Is it, 5%, for example? Also, maybe have a look at some of the historic performance. I know historic performance is no indication of future performance, but it will give you an idea of maybe have they made good investment choices before? What's the track record? So those are a couple of things that I would definitely think about in that. Putting all your money into one, I would question why you would. For portion, diversified portfolio, then yes, I think it definitely has a place. I think the important thing though is to make sure that you're comfortable with the choices that you make in terms of having part of your money into a global small cap. Just make sure you know what it's tasked to do and how it's going to go about doing that as well. I love the conversation that's going on here. McKnight's talking about the FTSE, the developed FTSE is doing really well for him at the moment. These are the kind of things that I really, really like, having conversations about that kind of stuff, because at the end of the day, this channel is hopefully here to help you guys learn and make the best decisions, or at least meet people that are in the same boat, so you can communicate with each other and actually help each other out with different opinions of how you're getting on. Because one of the key things that I definitely know is to be true when it comes to investing and just money in general is that sometimes it's a very lonely place. Like it's your investment portfolio, it's your investment account. When your investment account is down, it feels like it's just yours, and actually it's happening to other people as well. And sometimes just knowing that there are other people thinking the same thing, asking the same questions, can actually give you confidence and give you solace in knowing actually I can learn, I can get wisdom from other people. Conversations in the comments here might, put a new perspective that you didn't even think about before. So these kind of conversations are great. Really love it, guys. Thank you. There's a good question here, which was in relation to Andy. What happens if he moves back to Malaysia but doesn't close his account down? It depends on what the provider does, really, to be honest. I mean, the rules are you should tell them. Say back in the day, if you had if you're being sent like paper statements, then I would say that after a while, if they got returned mail, I mean, they can't close the account for any reason. I don't actually know what they would do actually as a provider. Everything's electronic now, but technically speaking, you're supposed to tell your provider when you're leaving the country so that they can administer it accordingly. So good question. I don't know that I know the exact answer to that, to be honest, Jordan. Okay, let's have a look at this. Why does it look like no stocks and shares LISA will accept to be transferred from another LISA? Okay, Jack, I might need a little bit more. Let me just have a look. 1 second. I know you just said on here, is it to do with the withdrawal payments, which is your follow-up here? As in the fee for pulling out, I thought because they're both LISA wrappers, it would be fine. Who have you tried to use, mate? I mean, Jack, if you want to use the link and come on, because I've got a load of questions for you, mate, in order for me able to give you an answer to that. I mean, but technically speaking, so you need to make the distinction though, right? So this is one thing. So if you're going to transfer from a lifetime ISA to a lifetime ISA, you want to be doing a stocks and shares lifetime ISA to a stocks and shares lifetime ISA. Now, if you, and I'm just going to pick providers here and just make these up. So if you had provider A, where your current stocks and shares life ISA sits, lifetime ISA sits, and provider B, and you want it to go from here to here, you would contact this provider and ask them to transfer it from this provider. Okay, so B to A. They should then facilitate that for you. That should be pretty straightforward. Because you're transferring, you should get around some of the withdrawal penalties, essentially, because you're doing a transfer. You're not closing the account, taking the money out into your account. It's simply being transferred to another account of the same ilk with a different provider for the same purpose. So I don't know why you're running into any problems here. It may be that maybe you're trying to do a transfer from a stocks and shares ISA into a cash ISA. That wouldn't work. Or it may be that maybe you're contacting a... Oh, here he is. Let's get Jack in. Hey, mate.
Hey, how you doing?
I'm good, man. I'm good. So what's the situation with this ISA then?
So, bit of a long story. But basically, I've got a stocks and shares ISA with Trading 212 that I'm using, but I've also got a LISA with the providers called Moneybox.
Yeah.
So that's just a general LISA. So they also have a stocks and shares LISA. And what I was thinking is, because me and my partner, we're not going to be in a position where we're going to be looking to buy probably the next 4 to 5 years. I'd actually rather put what's in my normal LISA now, transfer it across to a stocks and shares, because I think the returns will be better while I'm storing it. But I spoke to them and they just said, at the moment we're not able to do that, to do a transfer. So I spoke to some other providers like Hargreaves and Lansdowne, and they also have a stocks and shares LISA, but again, they're not taking transfers from other LISAs either. So I just wondered why no company is able to do that, whether it's because of the fee or something. But then I thought, because it's in the same wrapper, that I don't think that's right. So I'm just not sure why no one's able to do it.
So at the minute, is it in a cash lifetime ISA or a stocks and shares lifetime ISA?
Yeah, it's in a cash.
It's in a cash one. Okay. I mean, they may be saying it because maybe they just don't want that they don't want to be doing any more stocks and shares LISAs, which I find strange. But because it's a cash lifetime ISA, you want to get it into a stocks and shares lifetime ISA.
Yeah, that's right. And it looks like they're taking new applications. So like, I could go and open another one, but I maxed out my cash LISA last year, and I don't really want 2 different pots. Do you know what I mean? I want to have it all in the same place, essentially, which is why I'd like to transfer it rather than opening a new one.
Yeah, I mean, you should just be able to convert it, though, because really what you want is a conversion. You want it to convert from a cash lifetime ISA into a stocks and shares lifetime ISA. Really, that's what you want.
That's right, exactly.
That's peculiar. I don't know why they wouldn't just do that, mate, to be honest, because it has to be invested. So the accounts will be set up. The account setup where it currently is completely wrong. And if you were to withdraw it and move it over, you will have those withdrawal penalties. So whatever you've got in terms of bonuses right now, that will immediately come off and be discounted. Yeah. I mean, have you maxed out the allowance?
Yes, I maxed out last year. So I know it's in the grand scheme of things, there's not a huge amount to lose if I pulled it out and then just open a new stocks and shares ISA. But obviously, I just feel like it should be a relatively easy thing to do. But
yeah,
no one can give me an answer.
It should be. There will be account logistics within it because it's a cash ISA, stocks and shares. It's the whole conversion piece that they need to do, but it should be relatively easy. Have you tried Nutmeg at all? Have you spoken to Nutmeg?
I haven't spoken to them. When I went on their website, again, they're taking new. You can open a new account, but I can't see anything on their website about transferring from a cash LISA. You can transfer from another stocks and shares ISA, but I couldn't see
because they're the same kind. Yeah, stocks and shares. You do a transfer form, they just literally cart it over. It's because it's a cash ISA. That's where the sticking point is.
Gotcha.
it'll be worthwhile having a conversation with them just to say, look, this is what you want to do. What's the best way of doing it?
Yeah, right. Okay.
That's what I'd recommend, mate. Just have a chat with them and say, look, this is what I want to do. And it may just mean that actually, you know what, you just got to take the hit and just leave that where it is, but open a new stocks and shares lifetime ISA. But then again, you need to be careful that you don't, because you can't have more than one stocks and shares lifetime ISA within a tax year.
Yeah.
So you need to be careful of that as well.
Yeah. No, 100%.
but you could. Okay, so this might be something you could do. So you could. Who's the stocks and shares lifetime ISA with Moneybox?
Moneybox, yeah.
So hypothetically, you could try this. It might or might not work. You could go to Nutmeg and say, right, or Hargreaves Lansdown say, look, I've got a stocks and shares lifetime ISA with this provider that I want to transfer over to you, but I also want to transfer this account alongside with it as well, and see if they'll do it that way.
Yeah, right.
So basically what you're saying is, I want to transfer my Moneybox lifetime ISA over to you, but I also have an additional X amount in a cash lifetime ISA that I also want invested, and get them to suggest how you're going to do that.
Yeah, right. Okay.
It might work, it might not, but just something to try.
No, definitely. No, I really appreciate it. Thank you for the help.
No worries, mate. Good man. Cheers, Jack.
Thank you.
Cheers, mate. All right. Okay, cool. Let's see what else we have here. All right. Let's, where was I? Let me just find this. There's still good conversation going on in here. Okay, so Ming is just saying she can't find the link to the books. Let me just. I'll grab the right link this time, and opposed to half of the links that we posted in there. So bear me 1 second. There we go. That should be it right there. So that's a link to some of the recommended books on there. I actually need to add some to them, to be honest. Yeah, but they are right there. So let's have a look and see what else we have. Again, there's good conversation going on here. I like it. I'm going all the way back up, guys. Apologies. Bear me 1 second. Okay, this is a good one. Right. I had this the other day. I actually had this in coaching the other day, and someone raised this with me. It hasn't got a heavy UK bias. Right, let me just see if I can actually demo this, by the way, guys, just so that we can actually explain. And by the way, Dave, do let me know if there's one in particular that you're referring to, because when you look at the life strategy funds within Vanguard, I'll share my screen very shortly. They aren't heavily UK biased, in my opinion. But it is just my opinion. So let me just see if I can share this with you guys. Bear me 1 second, and we'll go through each of them. All right, okay, let me just see if I can get this maxed out in terms of the view. Right, so let me just hide this question. Can everybody see this? Hopefully you should be able to see this. I'm going to see if I'm going to make this a little bit bigger for you. There we go. All right, so this is the Vanguard side, right? Now, this is the life strategy fund. I'm just going to pick the middle one here, which is the 60% equity. Now, what I tend to do is I go into the portfolio data right here. Now, all of these are obviously ETFs, right? They're their own ETFs that they're effectively invested in. But, I mean, this is why I feel that they are not heavily UK weighted, because you've got to think about where it's invested in what kind of instruments they're invested in. This is a blended approach. So this has got a developed world, excluding the UK. So there's no UK in here, and that's the highest weighting in that fund. Then you've got global bonds. This will be global, will be US, UK, Europe. It's global bond. Then you've got the UK FTSE All Share. Okay, now that is a UK exclusive portfolio. Then you've got the US Equity Index. You got UK government bonds. You got emerging markets, UK inflation linked. But look at these percentages. Just because you've got 1, 2, 3, 4. So that's all you've got, really, guys. You've only got 4 of these, maybe 5 of these that are UK based. But look at the weightings: 15% there, 5% there, 3%. So this is another 3% on there, right? And then you come down here, which is pretty much barely anything at all. So that isn't heavily UK weighted, in my opinion, at all. And you've got to look at it from an equity and bond perspective as well. You may argue and say, well, actually, you know what? Maybe you would want more international bonds in there. But I think that this is a very well globally diversified portfolio, the way it's built, because you're getting a bit of everything. UK, US, you've got emerging markets within there as well. You've got FTSE developed Europe, excluding the UK. You've got a global aggregate bond, again, global, Japan in there. You've got US, you've got Europe, US, Pacific, Euro, Japanese, UK. That is not UK weighted, in my opinion. It just doesn't stack up from a percentage point of view. But that's just my view. But I had this in coaching. I think it was maybe a couple of weeks ago. And when we really cut it down like that, we get to find out actually it is globally diverse and globally diversified in terms of its investment leaning within the Vanguard sphere. And that would have been extremely well researched and put together as well. So I don't think that it is UK bias at all. Yes, Amit. Yes, they do. And I hope that they can pull it back. I don't know what would have happened. Obviously, I'm not watching it, but I don't understand how they've gone from 1-0 up. Liverpool must have gone into a second gear, so we need to bring it second half. Let's see what we've got here. Can you have a cash ISA, lifetime ISA, and stocks and shares ISA at the same time if they were opened in different years? Yes, you can. There's nothing wrong with you having all kinds of different ISAs across different tax years. In fact, in that instance, you can have all 3 of those in the same tax year without breaking the ISA rules. Yeah, Amit's just kind of just leading on here, just checking your comment on here, Amit, about having a small allocation compared to a lot of your holdings in a global small cap. I think, again, for all the reasons that we spoke about earlier. I'm going to read this out anyway. I don't particularly have a view on Shopify or SQ. They aren't stocks that I've actually tracked. So I can't give you a proper view because those aren't stocks that I necessarily track myself or have paid attention to personally. I like this. A united question. Is Donny van der Beek a hold or a sell? You know what? I feel so sorry for him because when did he play? He played in our game against... Who did he play against? We came back and won last week now. And he hasn't got the rhythm. And you can't blame him because he's barely played. I think personally, do we need him? I think we'll probably keep him because we need that strength and depth for next season. But will he play? I don't know. So I think a hold for him at this point in time, just in case we do need him. He is a quality player, but he does need a run of games though. What's a good starting portfolio for beginner investors, please? Well, it depends on provider, mate, really, to be honest. I'm assuming that you'll be thinking about using a provider there. I wouldn't look at it from... Sorry, guys. I wouldn't look at it from a portfolio point of view. I'll be looking at it from a provider point of view, particularly if you don't want to do it yourself. You don't want to be investing in individual stocks and researching stocks yourself. So try and search for a provider with a really good reputation. Vanguard's, Hargreaves Lansdown, they've been around for a while. Fidelity, they've been around for a very, very long time as well. With those guys, you still kind of need to understand what you're picking because, they give you like a list of things. They give you like a shopping list and you need to pick the ones that you want. If you don't want to do that, then think about robo-advisors that will do most of that work on your behalf. So you literally just apply and they filter you into a selection, into a portfolio based on questions that you answer when you open up the account. One of the best ones for them would be the likes of Money Farm, Moneybox, Wealthify, Nutmeg. They're very, very good. So those will be options that you can have a look at. But, don't think of it as portfolios if you're not looking to do it yourself. look at it from a provider point of view, research the provider. If you are looking to do it yourself and you're looking at people like Vanguard, then that's difficult for me to answer without understanding or knowing what level of risk that you want to take and how long you're investing for and what your goals are. So I would say make sure that you bear in mind a couple of things. First, if you're only investing for the short term, go low risk. If you're investing for the long term, you can afford to go high risk. It's just a question of high risk you go. You can pick a load of stuff within Vanguard. I can't even begin to even say, right, go with this kind of portfolio, because there is so much and so many options within Vanguard that you can choose. So I know it's not a direct answer, mate, and it's not a clean answer, but I hope it's helped anyway. Yeah, sorry, mate. All right, guys, there's 88 likes at this point in time. Let's get this to 100. Need 12 more, please. And yeah, the like button is really, really important for the YouTube algo. Let's see what else we've got here. I'm just going to see how many. Oh my God, 3-1. Seriously? Oh my God. It's painful. I was rather looking forward to gloating to my mate who supports Liverpool, the fact that they might not get top 4 and probably will be without European football. Oh, God. All right, we're at the end of the season. There you go. Who knew? We're still second, but disappointing. Right, let's have a look and see where we are. I'm going to try and get through all of these questions, but I am going to give it. Oh, we're almost at the hour mark at this point, so I'm probably going to give it maybe another 10, 15 minutes. So let's see what we can get through really quickly. I'm just trying to find my way back to where I was. Okay, here we go. This is a good question. So I'm assuming I'm going to answer this in one way. So the question is, why have dividend stocks been slowly rising this past couple of months? It does seem they have been hit a bit this week, though. Yeah, so, right. Dividend stocks are typically companies that are making profit that then share the profits with their shareholders. So when markets are volatile, what tends to happen is a lot of people will go and buy dividend stocks because they are more secure or at least financially strong companies, right? Because they are turning over a ton of cash. They're still making profits. They're sharing those profits with their shareholders. Now, with dividend stocks, some companies will have ex-dividend dates. So, for example, if they pay out dividends in April, you may find that in January, there's a lot of people who go and buy their stocks because they will get a dividend payment in April. So all of these factors come into play. Now, with the way the markets have been over the last 2 to 3 weeks, dividend stocks will also take a hit. Dividend stocks are not immune from markets ups and downs, but fundamentally, you would think that they wouldn't be affected as much as growth stocks like Tesla and some of the tech in companies that you have in there. So that's why you'll see that they would have gone up over a period of time and they will take a hit now. They're always going to take a hit, but dividend stocks shouldn't be as volatile as some of the dividend, as some of the giant tech growth companies that you're seeing right now, which is again what I explained in the video last Tuesday, and I explain in the video from a UK perspective in the video tomorrow, that you want these big companies that are turning over cash. If they're paying dividends, fantastic, because they will give you a little bit of security in the fact that the big institutional boys, they will go there as a safer place to hold money, if there is such a thing as safer, when there isn't really in the stock market. So yeah. Right, I've just seen this question because we've got some trolls. So let me just address this straight off the bat. It's interesting, actually. I first and foremost, let me say thank you for you actually coming in to into this chat. Now, I haven't spoken about them for a while, but if you're going to come along and ask me a question, then I will obviously address it. We will continue to speak about it. That's obviously not where I spend most of my energy. But this is the question. Okay, I've heard you've made over £250,000 with CashFX. Why do you release so many CashFX scam videos? Is it because you're monetizing your scam videos? Really good question, my friend. Now listen, you guys try to get me into the family to start promoting CashFX when my channel was at 5,000, and I said no. I actually bought a pack into CashFX, didn't like what I saw, and then I made videos telling people about my concerns based on my experience of being 15 years in the financial services industry, having worked in the investment world, knowing that a lot of stuff that you're peddling is questionable, to say the least. Okay. Now, it is my personal choice to put my opinion out here because at the end of the day, this channel is about educating and empowering people. And if I see something that potentially could mean that people lose money because it's not 100% legit, and you now have 19 international fraud warnings from international regulatory bodies, that is something that I am going to speak about. Now, I have not made £250,000 from CashFX because I refuse to promote you. Now, if my videos are popular and one of them is trending on Google, is because you guys are very, very popular right now. And unfortunately, you guys are the source of a load of questions. My video just happens to be trending. My video is not the only one that is out there, but many of you guys who are in CashFX seem to have a bit of a problem with my video because it's one of the most popular ones. I just say it as I see it. I don't like the proposition. I don't think it's legit. I tell people, look, if you want to go use them, absolutely go use them. Make sure you do your research. And if you're happy with what you find, absolutely go use them. But in my professional and my experience, I feel as though it's not something that I would touch because it's not right for me. I don't think that there's anything bad in that. If you're moaning about my videos being monetized and I'm getting paid because I'm keeping people on YouTube, well, sorry, mate, I don't know what to tell you. That is your problem. But anyway, let's get back to the people who actually matter and are actually asking legitimate questions. This is the kind of stuff that, I will address when it comes to it. I've left it alone and I get asked all the time about this. And I always try to be really, really kind of like middle of the fence here. Some of the stuff that they do is beyond questionable. And the narratives and the comebacks that they give are just illogical, especially if you work in the industry like I have. So we'll just leave it there, shall we? Right, let's see what else we've got. Yes, Amish is saying here, I haven't seen the video from Pension Craft, but they are very, very good. So again, with the lifestyle strategy funds, definitely go check out those videos as well, because they're very, very good. They're quite knowledgeable guys as well. All right, this is a really good question. This is more of a mortgage question than it is an investment question, though. So let's have a look at this. Thoughts on help to buy versus stocks and shares to buy property. Let me know what you mean, Sophie. Do you mean the equity share scheme? So, all right, I'm going to answer it under the assumption that that's what you mean. So with a help to buy mortgage, for example, what the government basically does is they give you, say, 20% of the value of the house that you then use towards your deposit to boost your deposit, right? That's help to buy. Now that will be interest free for 5 years. And after 5 years, you start to pay interest on it. There are a couple of caveats you need to know with that. If you do take a help to buy and you get 20% from the government, first and foremost, you can't pay it off in installments. You have to pay it off either in one whole lump sum or two lump sums at the maximum. So that can be quite a barrier and a restriction for many people, because it means you've got to really have a strict financial plan to make sure that you have a map to how you're going to pay off that lump sum that you borrow. Also, you have to then pay a premium of, I think it's either 10 or 20% of the value of the property at the point where you're paying off the loan. So for example, if you buy a place for £100,000, for example, and they gave you £20,000 towards the deposit under the scheme, if by the time you get around to paying back that part of the loan in the first 5 years and the property is valued at 120, it's gone up 20%, you're going to give them £20,000 back plus 20%. That's really important to understand and bear in mind as well. That's help to buy. With equity, where you're buying a piece or a portion of a property, so you have part mortgage, part rent, you can staircase. So on a year-to-year basis, you'll have the ability to, for example, if you start out at 60-40, you own 60%, the developer owns the remaining 40%, you might have the opportunity every single year to staircase. So to buy an extra 5 or 10% once you start in the mortgage process. So they're equally as good. I think you just need to bear in mind that there are downsides to both. So for example, on the equity share one, you can only sell it if you sell it whilst you're under that agreement at fair market value. And I think from memory and from experience, the developers or whoever owns the other portion of that property has a say in what they feel is fair market value. So there's pros and cons to both of them. What I would say is make sure you go and see a mortgage advisor. A mortgage advisor will be able to tell you what the best option will be for you. And that will be the best course of action that I'd recommend. Just looking for some other questions on here. Okay, let's look at the time. We're an hour and 6 minutes in. So let's have a look and see what we can get through. I'm not sure whether this is a question or just a statement, so I'm just going to skip it there. It was about Free Trade, Orca, eToro, Fineco, HL Stake, Trade in 212 when they open again. I'm sure there are more. I'm not sure whether that was part of the conversation beforehand. I think it is, so I'm just going to skip past that one. Right, okay, look, so I'm not a crypto expert, so I can't really say that. I can't really say for sure which one will be the best one for you to use. I mean, I have had a look at Coinbase. I've had a look at Coinbase, just the basic one, not Coinbase Pro. I have had a look at eToro, because the thing that I like about eToro with crypto is you're limited on how many cryptos you can buy and what cryptos you can buy. But you can also buy shares and invest in ETFs and that kind of stuff. So for me, it's quite a nice place to invest generally in the stock market and also in crypto. I think a lot of the crypto heads will talk about Binance, Kraken, those kind of places, Coinbase Pro as being some of the best places for you to essentially buy them. People are saying to stay away from the likes of PayPal, Revolut, and that kind of ilk, because when you buy cryptos with them specifically, you can't get them into a cold wallet if you needed to. And if you're buying crypto, that's really, really important. So you want to make sure that you can get it out into a cold wallet if you want to store it yourself. So maybe try some of those: Coinbase, eToro, Binance. Those are 3 right there. Binance, you kind of need to know what you're doing because it can be quite overwhelming when you first log in. Coinbase is very, very simple. eToro is very, very simple. So it depends on what experience you have and where you are, but those are just 3 to get you started. But like I said, I am not a crypto expert. I am still learning about crypto myself, so I can't really speak with that much authority on it. Let's have this one from Kevin. Okay, can I put all my money in a stocks and shares ISA, then the next year move providers, but just let that stock compound if I don't add any to it? Yes, you can. So, I mean, you can have as many stocks and shares ISAs as you want over various tax years, and you don't all need to have them all with one provider. It makes it easier to manage. Sorry, guys. It makes it easier to manage if you have it in one place, but you don't have to. So what you just described there is completely fine. Good one here. What do I think about robo-advisors? Robo-advisors have pros and cons. So the pros are, if you're a complete newbie, you don't really know how things work, they will take that workload for you, do the research, they will set up the account, they will literally run and manage it for you. The downside is that you're going to be paying additional fees. And this is why most people will tend to avoid using a robo-advisor and try to go with the likes of Fidelity, Vanguard, so on and so forth, because they are better value and they are better priced. But again, even with Vanguard, you have to know what you're picking and understand what you're picking, because they don't provide you any guidance. It's a shopping list. You literally pick what you think is right for you. So most people will need guidance. I help a lot of people with those kind of things when it comes to coaching, because it is a minefield. It's very, very confusing. The language, the layout, what are you looking at? What what does everything mean? I help people with that in coaching. So robo-advisors will take away a lot of headache around you actively having to know what's going on, and they will do it on your behalf, but you are going to pay them an additional fee for it. That's the downside. Thank you for this, mate. Yeah, it has grown. It's grown massively since January, thankfully, and I'm thankful for it, to be honest. Yeah, as we get up lockdown, though, we'll start to see that as life gets back to normal. I mean, I was thinking about this the other day. I started this January last year, and we've been in lockdown the entire time, really. So the growth of the channel has been in pandemic. I don't know what this channel traffic is like in normal times, and I guess I'm going to find that out as we come out of lockdown, essentially. But yeah, it's been great. It's been a great ride so far, and I'm thankful to every single one of you for supporting and being here. So thank you. Thanks, Amit, for this. We are planning to get Terry back, actually, to be fair. We will get him back. He's a very, very close friend of mine. He's a really, really, really good guy. I used to work with him in an investment house. I trust him explicitly to come onto the platform and actually give a view that is well informed. He really does know what he's doing. So yeah, we will have him back on the channel at some point. Okay, so this is just a clarification point, Kevin. Moneybox is a robo-advisor. How they invest is a passive investment strategy. So they are classed as a robo-advisor, but they invest for the people that invest with them on a passive basis, meaning it's not managed on a day-to-day basis by a specific team. The language can be really, really confusing. This is a really, really good one, NVIDIA. So I held NVIDIA in the state trader v trader challenge. I sold out in the end because, I mean, I stupidly chose the tech sector and I chose renewable energy. Whilst tech has been down over the last couple of days, apparently energy has been up 40%. Crazy. So I'm expecting her to have some really good returns over the next week or so if energy sustains itself like that. In terms of NVIDIA, I think they'll be okay. I wonder, and I'm sure they're going to be impacted by the chip shortage. I'm sure that they're going to be impacted by that. But they are a really, really big company, mate. They're doing some really great things, providing chips to a whole host of companies, industries as well, for a whole variety of applications. Even if you look at the EV space, they're all over that, mate. Like my Tesla's got a NVIDIA chip in it. Like this screen, I bought a 49-inch curved screen, which I'm now working on. That's got an NVIDIA chip in. So they're doing a lot of work, a lot of work. So I'm sure that they'll be great long term. Yeah, this is a question. You can get Vanguard in the UK, Bukola. You can definitely. I mean, the website I showed earlier, that is the UK website for Vanguard. So you can get Vanguard in the UK. It's accessible there. It's not accessible in places like in a certain part of Ireland. It's not available. All right, listen, I've got to give a big shout out to this, right? I'm watching from Montreal, Canada. Dude, like, if you're still on, mate, if I need to get some more equipment because as I go into like live streams, I need to give you a round of applause, and I wish I had a button for a round of applause. Thanks for watching from Canada, mate. Really do appreciate it. I haven't been to Canada yet. I've heard it's beautiful. There's a guy on TikTok who has the most amazing account, and he just goes trekking through certain areas of Canada, and it looks beautiful. Never been. It's on my list. Yeah, this is a good one. Wish. Yeah. Wish is a big company, man. Wish is a big company. They're online as well. There was news about Alibaba making, $1.2 billion loss or something like that. I mean, Jesus Christ. Crazy. Okay, this is the one from David. So the 25%. Let's have a look at the 25% one, actually. 1 second. Let's just go back on the Vanguard one. I did see your comment earlier, Kevin. I'm not sure that I can make it much bigger, but let's have a look and see if I can or not. Life strategy. Right, the 20% equity. Let's see what the portfolio makeup for that one is. Right, let's click this on. Let me move me down there. I am going to try and see if I can stretch this so you can see. Actually, I can't. 1 second. Let me see if I can just do this. All right. Okay. Hopefully you can see this properly. Right. So let's have a look at this and let's see if it is UK weighted, Dave. So in here you've got global bonds. So obviously it's important to bear in mind this is 20% equities. The rest of it is in bonds. So this is very, very low risk in terms of the strategy on which is invested in, right? Or upon. So this is a Vanguard global bond is the first thing in here. That's the big holding, 19.3%. Then you've got the FTSE developed world, excluding the UK, as the second largest holding here. Then you've got UK government bonds. You've got a global aggregate bond here. You've got UK inflation, UK investment grade. You've got US investment grade, Europe, US. You've got FTSE UK all share. That's again 5.1%. You've got Euro, Japan, emerging markets. There's certainly more. I mean, this is what, 11... Let's call that 19%, 26%. No, there's only about 26%, mate. So it's not really UK heavy in terms of. Sorry, I just realised that's been on there. It's not really UK centric. Yeah, it's got exposure to the UK, but I think it's again still very well balanced because you've got global there, you've got some developed world stuff there. Yeah, you've got global there. US, Europe, US, you've got a UK bit there, European, Japan, emerging markets. It's quite balanced, mate, in my opinion. It's very, very well diversified. It does have a global outlook. So I wouldn't say, in my opinion, that it's heavily UK weighted per se. Right, I'm just going to see where I am, guys. Bear me 1 second while I try and catch up with these comments. Let me just say, right, okay, look, there is a super chat here which I need to get to. Bear me 1 second. Where are you? Oh my God, you're all the way down there. Okay. All right, so thank you for the super chat, Mal. Really do appreciate it. So, money box or money farm? Okay. I'm going to caveat this because I've got money with one and I haven't got money with the other. So I'm going to give you my view based on my experience of them, and then you can decide. So with Moneybox, they invest on a passive note. So essentially, they will invest it for you, and it will just track the market, right? It will just do as the market does, which is fine. You're going to be paying fees with them. I know you pay like a monthly fee. I think it's £1 or something like that. 3 months is free. This is coming from memory. I may be wrong. 3 months is free. So I think it's £9. Then you're going to have the fund fees and some other fees as well. Okay. So you're going to be paying some fees with them. Now, Money Farm's slightly different. I have money with Money Farm. Now, Money Farm is an active manager. So in times like this where the markets are really volatile, you may argue that you want an active management. You are also going to pay Money Farm a fee. So the thing is, there are two questions that you need to ask yourself in selecting this. Number one, are you happy to pay a fee? Unfortunately, if you're going to use either of them and you're considering both of them, there will be a fee. It's just how much you want to pay. So who's more expensive? If it turns out, and I don't know whether it is or not for sure, because I don't know Money Farm's fees off the top of my head. If it turns out Money Farm are more expensive than Moneybox, then you have to ask what they're doing for it. Now, a couple of things that I know for sure. Moneybox, you can't pick up the phone and speak to their team. Money Farm, you can. You can pick up the phone, book an appointment with them, and they will call you to discuss your portfolio. You can ask them questions as many times as you like. No problems at all. My money with them, they rebalanced my portfolio, I think 3.5 weeks ago, because they didn't like what was going on in the markets. Personally speaking, even though I've got all of this experience in the industry, I like having that kind of service because it means I haven't got to think about it. I've got lots of stuff I do during the day. the last thing I want to do is think about managing all of my portfolios in one go. That's not fun for me. I don't necessarily want to do that, not on a ongoing basis. So they did that for me. So if I had to choose between the two of them, I would go Money Farm. I do have money with them, so I'm kind of biased that way. But for you, make sure you're asking the question of what they're going to do for their fees, what service you get, what the fees are, and then you have to then decide whether you're happy paying a little bit more, a little bit less, and whether you're happy with the level of service they provide you and whether it's going to add value to you. That's what I would say would be the right approach for you to take. That's just my opinion. I hope that helps, though. And I appreciate the super chat. Thank you. All right, guys. I'm not sure that I'm going to be able to get through all of these. I really, really don't think I'm going to be able to get through all of these. Let me just check something out, though. 1 second. So listen, if you're in my comment section having an argument like with me, like, or with people that are on the that in the comment section, and I'm speaking about Cash FX Euro here, like, you're wasting your time, mate. At the end of the day, like, if you don't like my video, you don't like my channel, like, that's completely fine. All right, you can voice it as much as you want. I know there's a number of you now that are making videos about me, and there are memes of me going around in the Cash FX groups. That's completely fine. That's your opinion. At the end of the day, you don't like what I've said. And unfortunately, you guys cannot mitigate what I've said with any real dialogue or concrete proof. Or like, for example, you have the link for this stream, right? And at the end of the day, I've said at every junction, if anybody from Cash Effect wants to come along so we get a balanced, fair side of the argument, because I'm coming with my opinion of what I think is wrong and why I don't like it and why I think people should be careful. I'm giving that as my own personal opinion based on my experience in the industry. And I've said at every turn, I'm more than happy to have one of you guys come on and give your side of the story, because there were always two sides of the story, but you never do it. You never, ever, ever, ever do it. And you're in the comment section right now. Let me do you a favor, and I guarantee you won't, but this is the link. This is the link to join me right now. Right now. And look, I'm not going to call you names. I'm not like that. That's just not my style. I would genuinely love to have a conversation with you to say, right, this, so you can put your side across and say, look, this is what we think we're doing really, really well. And I'll ask you some very, very straight questions, the questions that I've been asking all the way along, and see if you can answer them. And we can agree to disagree. That's completely fine. But you get so pent up and you get so angry at the fact that I literally made a video giving my view. I mean, God knows what you guys must be doing to Rue. I mean, Rue's been in Cash FX for much, much longer and sees that it's not right. And he's calling you out even harder than I am. But you guys are so pent up and annoyed about this. So let's see what happens. I mean, if you want to come on, mate, please do come on, because I would love to hear your side of the story. I'm just saying. Let's have John on, by the way. John, how you doing, mate?
Hello, man.
How's it going?
Everything's fine. I thought this was a discussion about the problem with stock market. So, but I just heard that you're talking about opposing teams. So I don't know what's discussed. I thought it was about their opinion for the fall, which I'm losing money right now.
Well, no, yeah, it is. So we're talking about the stock market, but I gave a little bit of attention to the troll in the thing. So, I mean, where are you at the minute on the stock market? You're down, I imagine?
I'm down. I'm on, stocks with high momentum. I'm in BNGO, some T-Bio, but mostly BNGO, which is like 150% off from my price. I'm losing, but it's a risky stock. But I don't know, the stock market feels really weird right now. I feel we're in a weird position.
It is, yeah. I mean,
and
this
thank
is the
you
thing.
for giving me the opportunity to speak with you.
No, not a problem at all, mate. Like I said, this is always open. I want to do this more regularly. I think if you're down at the moment, I think it's just kind of, you have to kind of revisit why you bought the stock in the first place. I think if the markets are on a cycle and markets just kind of like, Most of the stuff that's happened has been because of the fears about inflation. If none of that impacts the fundamentals that you've been, or the reasons why you bought that company, then you should be okay, as long as you're willing to wait the long term for it to ride out. If the fundamental reasons for you buying it are still the same, then hold it. If the fundamental reasons have changed, though, that may be a catalyst for you to rethink, okay, do I need to have a look at this again and maybe plot an exit? But I don't know what your reasons were to start with and where your outlook is.
You're right. Can I ask you one thing? Because I'm not from USA, but I trade in the stock market. The fact that USA printed all this money, do you think that in a year, some months, when things are going to open up after COVID, that something will blow and we will lose a lot of money? Because right now we don't see this hope, but I think this is coming.
It's hard to say because we don't have a crystal ball to know what's going on in the future. I think if you look at the stock market at the moment, there is an argument that it's at a bubble. And the fact that they have printed so much money has meant that the market is in an artificial state right now. I think you have to get to a point where monetary policy will mean that interest rates will go up and they will have to taper back at least some of the money that they have pumped into the market. Now, it is the Fed's responsibility to do that in a manner that won't upset the market to the point where it goes pop. And that's where monetary policy comes in. From an investor's point of view, can you control that? No. The only thing you can do is try to make sure that you address and mitigate the risk that you carry within your portfolio and how you trade or how you invest. And that will be the key thing for you to kind of like bear in mind. Because if you look at it, the guys at Jerome Powell and Yellen are not going to put out a statement or do something that they think will crash the market tomorrow. They just won't. They won't do that. They may say or kind of signpost and say, right, we think that this needs to change. And they will introduce methods to have that change over the course of a period of time. And they will try to manage the markets as much as possible. I think as investors or traders, the job is to try and react or at least position yourself within that market space with that as a contingency in mind. Does that make sense?
Yeah, I understand what you're saying.
It's a really difficult one to answer, mate. Because if we knew what the future was going to hold, we'd all be like, you know what? We're going to do this. But it's really, really hard. We just don't know what's going to happen.
I know. Thank you very much for this opportunity. I'm going to leave space for others to join.
No worries. Cheers, John. Thank you.
Right. Wish you the best, man. Right.
Cheers, mate. Thanks. All right, guys. So actually, I did have someone pop up. He's now popped off. If you want to come back on, that would be great. And I'm happy to dedicate a little bit of extra time. But let's see what else we have in the question section here. Here's a good one. What do I think about DEGIRO or Revolut for trading? You know what? Those are the two that I'm yet to actually properly have a look at. DEGIRO is on my radar. They are very, 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 very meticulous. Like when it comes to like detail. So sign up process, that kind of stuff. And even if I wanted to make a video on them, for example, they're very, very meticulous about making sure that the correct information is out. Now, me personally, if a company like that is meticulous, I like that because number one, it means that they are very compliance minded and they want to make sure that they get things right. So them as a trading experience, though, I don't know because I've not reviewed either of them. But what I do know of DEGIRO is that they are very, very meticulous in terms of the detail and information and making sure that they get things right. So, yeah, there you go. I need to do a review on both of them, to be honest. So maybe that will be one that will come down the line shortly, Aga. I don't know what's going on here. Look, listen, guys, if there is an argument going on in the comment section, guys, please just ignore it. Don't engage in it. Like, it's not worth it at the end of the day. If people want to come along and basically troll, and that's their own business. If they want to spend, their Thursday evening doing that in the comment section, then let them do it. Be my guest. You're wasting your own time at the end of the day. So this session is to hopefully help people who are looking to invest and might be a little bit worried in the markets, and we've gone off on a little bit of a tangent, which is fine because this is a conversation. So that's really important to bear in mind and acknowledge. Do you think that inflation concerns are overblown? Potentially, yes. I think whenever news like this comes out in the markets, right, you have to put it in context to where we are and where we've been, right? So, for example, inflation coming out at 4.2%. That was way over the estimates. But you have to think about the fact that, well, most countries haven't been working. Economies have not been operating in the same way that they were before. So when you look at the PPI costs, of course, costs have gone up for producers. Of course they have. And if a company incurs costs, what happens? They pass it down to their consumers. It's just natural. So I think a lot of it is blown out of proportion and it is transitory. It's going to be short term. I think in the long term, and which is the bigger picture which we should all be paying attention to, the long term, we're going to be absolutely fine. But right now, it's a little bit painful. It is a little bit of a uncomfortable place to be. But that's natural. That's okay. There's a question here. What are my opinions on BlockFi? I can't say that I have checked them out just yet, so I can't really say, mate. But again, there will be more crypto content and BlockFi and stuff like that on the channel. But like I said, I'm not a crypto expert, so I can't really speak heavily on crypto specifically. But yeah. I think this kind of links into the previous question. How long do you think the markets will fall for? Is the US inflation a worry / factor? Yes, inflation will be a factor moving forward because I think it will impact the markets moving forward. To what extent, we don't know. How long will it last for? We don't know. Many people are saying September, October, roughly, but it's anybody's guess. I think importantly, again, I say this all the time, it's all about managing your downside risk and going into this from the outset, trying to mitigate that downside risk as much as you possibly can. Carly, who is one of my members, has basically just said that Swissborg is a good mobile app to get you started. I haven't actually checked out Swissborg, so that'd be one that I checked out as well. This is a good one, Anna, with Nigel. So how's your challenge going with Anna? Okay, so I was down 20%. Oh, no, actually, how much was I down by? I was down to about $980 or so like that on Friday last week. I think Anna was down to like $891 or so. So I'm doing slightly better than her, but I haven't really made much money. I made a few calls the week before to basically move the portfolio around a little bit, which stems some of the downside risk. And when I did a comparison, it was good that I made that choice. I don't know where she is right now because energy had a bit of a surge yesterday. I think / today it was up 40%. She's probably gained a little bit within her portfolio. I think I'm still ahead of her, but we both haven't really made money at this point in time. But again, I'm not trading on a day-to-day basis. I've got things to do during the day. So I'm not specifically paying attention to it in that way. Yeah, so this is about Revolut again. All right, you're the second person that has basically mentioned this, so maybe I need to actually have a look at doing a review on Revolut. I'll write that down because I've not reviewed them just yet. So I'll have a look into it. Let's have a look at this one. I'm going to take maybe 3 or 4 more questions and then call it because we've been about 94 minutes right now. Maybe a silly question, but I have to ask. I recently opened a monthly Vanguard strategy account, forgetting that I have a H&L account, but has no funds in it. Will this affect my Vanguard account? Leon, it depends on whether you're referring to it being an ISA, an investment stocks and shares ISA. If you've not paid into the Hargreaves Lansdown account, you're fine. But if you have, and you've also paid into this new account with Vanguard, then you need to either get your Hargreaves Lansdown transferred into your Vanguard. But if it's just a normal investment account, like a general investment account, then you're fine. You haven't got to do anything at all. And also, if your Hargreaves Lansdown account is open but you've not paid money into it at all, then you should be fine. You can't contribute to two ISAs in a tax year, if that makes any sense. So in your context, you can't contribute to a stocks and shares Vanguard account and a Hargreaves Lansdown Vanguard account in the same tax year. Hope that makes sense. Oh, this is a good one. I like this. Thank you. Thanks, Terry, for helping me to investigate an old pension that I had and added 11,000 to my pension pot I knew nothing about. I'm 52, only discovered investing in the last year. Mate, Lawrence, this right here is what it's all about. And it's little things like that that, trust me, they make a world of difference. They really, really, really do. They make a world of difference. I will extend your gratitude. I do appreciate it. And thank you for coming along on Sunday, mate. I really do appreciate it. Thank you. See, I'm just, oh my God. Oh dear. I'm just trying to have a look and see if there's one more question that I can pick, which is a pertinent one. Interesting comment section this evening, guys. Oh dear. Okay, listen. So, sorry, mate. I've just seen this. I thought that was you earlier. All right. So, if you want to click the link again, if you're still in here, click the link now and we can have a little conversation. And you came up as Hasqua. I want you with the camera on as well, by the way. So don't click the link and think you can just stay anonymous. Like, put your camera on. Let's have a conversation. We can actually speak eye to eye. So I'll give it maybe a minute or so. I don't know if you're still in here. I'm just going to scroll down. You're still in the comment section. So I like this one as well. Where was it? That was the wrong one. Sorry, mate. 1 second. Let's find this one. Love your channels, but not a fan of the thumbnails. Mate, listen. I wish I didn't have to do thumbnails, period, right? But YouTube is all about the thumbnails, and it's a bit of a science. It really, really is when it comes to like YouTube and everything like that. So apologies, mate. Not something that I can fix easily. But yeah, it's a bit of an art. I wish I didn't have to do it because I spend a lot of time on thumbnails, more time than I probably should. But yeah, it's a sacrifice that has to be made for this kind of stuff to work. All right, guys. I guess Cash Effects Europe isn't going to come on. Anyway. They'll say, "Oh, I came on and he didn't allow me onto the stream." Okay, well, this is here for posterity because this will be on the channel, by the way. Look, guys, I appreciate you being with me. It is now 10 o'clock, so we've been on this for like an hour, 40 minutes. Like I said, I do want to make this a more regular thing. I'm testing out times and days at this point in time. I think that maybe 8:30, 9 o'clock seems to be the right kind of time. It gives people to get off work and put kids to bed and do what they need to do, so on and so forth, to get going. I think that maybe that time will fit. I just need to play around with what days will be best. Is it going to be a Wednesday? Is it going to be a Thursday? Will it be a Saturday? I'm not sure yet. But guys, I appreciate you. Before we go, please smash the like button. We've got 182 of you on. There's 142. If we can get that to 160, that will be absolutely fabulous. But guys, we'll do this again fairly shortly. There is a video tomorrow. Again, it's going to be about UK stocks. So again, from the video from last Tuesday where we spoke about stocks for beginners, and I gave 5 examples of stocks that could be used as a way to, or a foundation to, a solid portfolio. This is going to look at it from a UK point of view. So what are maybe 3 examples of companies that you can look at that can help you build a strong portfolio and give you the foundation so you can speculate from that point onwards? It does cover a little bit about the FTSE 100, the FTSE 250. I also took very, very high level about the AIM market as well, because the AIM market is a thing. But the FTSE 100, FTSE 250 are probably the main ones that you probably need to know. So I'll speak about that and then give a little bit of context around how it actually all works. So as always, I appreciate you watching this. Thank you so much. And really, thank you for the support, guys. I really, 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 really do appreciate it. And yeah, looking forward to a great summer and bringing you more value through the year. So cheers, guys. Have a good evening, whatever it is that you do. And I will see you tomorrow on tomorrow's video.